Hello everyone and welcome to today's Fork Friday, where we review some of the trades of the week, and we submit our charts anonymously, of course, because we all learn from it, and we are all on a journey. So it's really great when people contribute, and I appreciate it very much. So let me just start by sharing screen. And we're going to start, we've got 2 wrongs and 2 rights. So I'm going to show you where I've blanked out the name. I saved them, and the analysis that follows. So there was chart analysis 1, this one. I saw that. Where's mine? That's very sweet.
It's because I got a bruise, Sarah.
Oh, even nicer. Okay, so here's the 2 charts. So this one was a Euro NZD from the other day. I'm on the 1-minute chart, and the trade was for a sell. Entered at yellow arrow following break and retest of pitchfork, which is this orangey red line, correct. Under the pitchfork, correct. Under the 62 EMA, which is our rolling line of support and resistance, very aggressive. It measures, oh, I'm so sorry, that's doorbell. Oh, someone come to collect something. Right, sorry about that. So entered at the arrow, correct. Followed a break and a retest of the pitchfork, the orange red line, correct. Under the 62, correct. Break of trend. Well, I think this is the bit that we need to discuss. So we'll go over, because certainly you've had your breaks and retests and you thought, well, price has given it to you once. That went down about 20 pips though, I think, twice. And then 3 times it's saying sell me. So if we come over and look at where I've marked it up here, what do we actually see? Well, if we, hello, don't like it when TradingView does that. Please don't say you've removed all my stuff. I'm sure I saved it. No, thank God. If you look at the overall trend from, there's the whole day. So the green is Tokyo and it's down the whole way. The trend is your friend, downward momentum. So Tokyo, as per usual, stalls out about 20 pips or so. A fake out towards the open of London. Sometimes price does that on any pair, says it's going to go the opposite way when it doesn't have any intention of doing that. Big thrust downwards there. And then for whole of London, 50 pips, 100 pips, over 100 pips down into New York, which is called the New York reversal, which starts at 1 p.m. UK time. So that hour, generally, price is resting and consolidating and not doing very much, but it carries on here with a big stall out, which sometimes, yes, is a sign that it's going to drop, but it's also a sign that price can be reversing. So I've put on a pink. The pink is my trend line. There's the 62 EMA. So we know we've got a downward trend. So what we have here is the chart that was submitted had break of trend off this trend line here. So I've tried to replicate it there as best I can. So the issue with that is it's a very small trend line. Price has stalled. We were in an overall downward trend with a long wick off that pitchfork there, which says price doesn't really want to go any further. A long wick off at just past the hour. And then it tries to come up. It's actually what it's done is formed a new channel really, because it tries to come up. This person entered here. I put that on as a time thing to remind me where they entered. And it's very unfortunate really, because I can see that I could have easily fallen into that trap. I exactly see where you are coming from. But what price has done is it has decided at this very point when you thought that the trend was continuing, and it's formed this new channel here. Maybe not quite like that. Oh no, I better take it off that, I think. So it's formed a new channel because price is always moving in channels on different time frames. Whoops. And that's why you've got caught out. Because at that very point, it said it had finished its downward trend and it did the New York reversal on you. And it went up 50 pips up to there. I think that's about 50 pips from that pitchfork up to there, 60 pips. It reversed on you because New York reverses London. But very unfortunate because the overall trend was still down. The overall trend, as I've shown here, it's still down all the way through from Tokyo. It's still down on the bigger time frame. If we went out to the bigger time frame, we'd see that. So actually, 4 hours later, I know because I measured it earlier when I was looking at this for this afternoon, it gave you the entry here, and that gave you a beautiful entry as it carried on again down to that next quarter, which it tried to do here. Reversed in New York and failed to do, but it was quite late in the day. I'm not sure I would have been trading. That would have been 8:20 UK time, and that went down there 40 pips. So even if you'd got caught out fast pair with a 15 pip stop loss, you still could have made about your 25, your whole day's pip count off that one trade later on. So very, very unfortunate indeed on that one. So if I just show you out on the 5 minute what the overall trend looks like. And I don't really know what the answer is really, except the trend is your friend. And, you know, we just have to keep learning these things, don't we? So if you see it on the 5-minute, there you are, Tokyo, Open of London. Each of these orange dotted lines represent hello? Hello? Yes, I'm on the phone. How can I help you? Yes, there is. The code is on the fridge. Okay, it's in the instructions on the website as well. Okay, thank you. Yeah, okay, bye-bye. See you later. So the overall trend is down throughout London, 50 pips, another 50, making 100 through to New York. There's that New York reversal you've got caught in, and then so very unfortunate, and then it carries on a downward trend for that the next 50 pips until the extensions. So the scan completes and then starts to come back up again. So you've just got caught in something very unfortunate, I'm afraid, on that one. And then let's look at the next one. Oh yes, this was, so I asked one of our colleagues to also have a look at it because it's really nice. We all learn from each other, and I'm really happy if we do things anonymously. It's great. We just want to all learn. So I asked them if they'd have a look at it, and obviously I made it anonymous. I cropped my picture that I sent over, and I will always continue to do that. And this is what they said. They had this chart marked up like this. So they'd done that yellow break and retest line. This is the point at which the person entered, which shows that price is reversing. And they said, and they drew on these channels like this. So they said the best continuation of trend trades are the ones that break, test, and carry on with no hesitation. And if you remember, that whole of that was a downward trend that we saw. And it said the longer they stall out, the more chance of change of direction. So there's a long stall out. I'm not entirely sure about that because I've sat and watched the charts as they've stalled out and I've seen it ping. And I do agree, usually I've been looking at a sell and they've gone for a buy. That is true. But sometimes, like over here where we had that long drop, although it did drop a bit, it wasn't really a stall out, was it? Although it was in the price trap area of the quarter theory and the pitchfork. I have seen stall outs and then I've thought bang and I've seen it ready to drop. So I think it can sometimes go either way. And then it says here, the price is broken. What they mean here is here, this downward line, price has broken this price has broken and retested. That's what they're talking about, this green up and red down. So looking for a buy trade. Do you remember when I sometimes mark up charts with the yellow line and say what we're looking for, and then I do it like that, up? That's what this person is saying here. It's broken that downward trend and it's done that. And unlucky, really, bigger downward trend line in green. Absolutely, because as we saw 4 hours later, you had 60 pips, and even if you'd had to knock off 15, sorry, you had for 40, was it, or so, you would have still made your day's profit. But then you would have had to have still been looking at the charts and you know, saying to yourself, I'm going to come back trading at that point, or set another alert. That's another way to have done it. You would have had to have got in quite quick though, because it suddenly dropped. So that was that one. Got that up twice. Oh, I don't know why I've got that up 3 times in a row. The other one was this one, and I seem to have closed my picture. Desktop chart analysis 2. So this is, no, wrong one. I want Euro Ord, chart analysis 1. This one I found a little bit more difficult to find, so my colleague kindly found it for me. I just couldn't see it, so that's what I mean. More pairs of eyes on these things, the better. We'll learn faster and improve our accuracy and get where we want to get as a team together. So this was Eurnzd, which dated back apparently to the 4th of August, and I did find it in the end. So here what we've got is this orange arrow here to the right denotes where the entry was for the sell. And the confirmations were, with this orange line as the pitchfork, the oranges are current momentum in the market are 62 exponential moving average, EMA. So a break and a test of pitchfork for 10 pips. So we've got that twice. A pitchfork touch, correct. Under the 62 EMA, correct. Under the pitchfork, correct. And under quarter theory, which is that line there, entered at the yellow arrow pointing right. So I think what we then discovered is that the pitchfork I used is different from this person's pitchfork. So I've said to them, if they can send me the hourly scan, then I can have a look at what pitchfork they used, because it, you know, it helps us all. It really, really does. I really enjoy doing this. Not because I want us all to suffer pain, of course I don't, but it's the way for us to learn and improve. So if we come back to find that trade on our Euro AUD, and again, a very fast pair like EN, 10 out of 10. So you need your 15 pip stop loss. Okay, so let me just magnify that. So what have we got again? Downward trend from Tokyo, quite a steep downward trend. Price has dropped, what, 50, 75 pips by the time it gets to the New York reversal. So remember, if you are looking, and this is the second chart from this person where I've seen they've been trading at approximately the similar time of day, so maybe that's something to bear in mind. What happens in London gets reversed in New York. But then you can see it's exactly the same as EN, part of an overall trend down. So maybe coming out to the 5 minutes and having a look at the overall trend might help. Forgive the green scan in the background. It doesn't really have any relevance on looking at this trade. It just happens to be there on an A point, but I don't think that would have affected us. So let me, so here what we have, I've marked up a channel. So we have I'm on the 1 minute. We have the downward channel there, and you can see it breaks out of the channel quite late on in New York, actually. So that what you wanted to see marked up, that's my yellow marking. What I would normally do for one of my sessions is say, what are we looking for? And I'd say we're looking for a break and a retest of the pitchfork, and then for it to get out of that price trap between pitchfork and quarter theory with a break and a retest of the pitchfork, and then get in on the sell candle if you're coming in for the sell. That's what we do over and over again. So the first thing that I see here, and I think this is the one, as I say, where I'm working off a different pitchfork, so I can totally understand why this has happened for this person. I totally see what they're saying. So here I would have said break and retest of pitchfork under the 62, break and retest of the quarter theory. So it gave you that there. And then you had the sell candle down here, but you never had a retest of the pitchfork. So that would have made me very wary. And this gap is too wide because you want them all quite tight up together within about five, I think it's 5 candles of price, chance says. So what happened is, so I wouldn't have got in anyway, even if it had broken the quarter theory, because I would have been wary of it not retesting, and it's a very fast pair. So then sure enough, it happens to reverse at that point. That person then got in on this sell candle here, but you can see really this is a period of consolidation and stall out. And sure enough, there's your break and retest of the 62. And I put that on as to their trade. And the break and retest of that trend line. And then it dips again, but again, you've got higher lows. If I put the pivots on, the pivots will also tell you. So you've got higher lows forming and higher highs, indicating the channel has changed. I know they do sometimes do a bit of that and then carry on down. I know it's not always an exact science, but that's what we know about trading, isn't it? It's not sort of exact. So then it came up above the 62, back up to test the pitchfork. It's on its merry way, like these sodding things sometimes do to us, you know. So 15 pip stop loss, which also technically didn't cover your pitchfork anyway, but you still wouldn't have saved you, because look at that, it still wouldn't have saved you anyway. On it goes all the way up to the 15-minute, test the 15-minute, test the 15-minute, sucks along the 62, and we're now into Tokyo, and you don't get any more on this until, in fact, you haven't got any more trades, or unless you've got, I don't know what the gap is. That is a good point actually on this pitchfork. How big is that? How big is that gap? I can't even see the other. I must be at the bottom of the scan then. Just come out to the 15-minute. So there's your downward trend reversal up to the reversal. Goes right up. Goes right up to the extensions. So when did it go down? So we've got Tokyo, London, down in London, climbs all the way, 100 pips in New York, stalls out all the way through Tokyo and London again, then does the same drop, exactly the 100 pips back down. So you would have got a trade there. I think you might have had your 10 pips break and retest round about there with that drop there. I need to come back down. And then I've got two charts to look at for you, which went okay for someone. And again, no comparisons. We're not trying to do that. I need help. I asked someone to look at the chart for me. You know, we just want to all get better at this darn thing and hit the home runs. So did that give you enough for a trade entry there? I think it did. Was that 10 pips there? Exactly 10 pips. So you didn't get a, right. So the important thing is the pitchfork touch. You can see the 62 has turned and you are off those extensions. And I think Chance says he doesn't like trading off the extensions, but I think if you catch it, you're catching that 88.6 thrust up from the C to the D, or the thrust down. I mean, I could be wrong, but I quite like looking at them. I think the difficulty is it's because it's a reversal in the market, and those trades are harder to spot than the momentum trades. So we had a break and a retest here, and then we've got the quarter theory above, which is good. We've got the bigger break and retest back to the 62 and the outer extension. So fair enough, it doesn't give you a break and a retest back to the quarter theory, but that will be, I think, because of the pitchfork and the 62, and there's the 50-minute, and there's the inner extension. So all that is holding price. So that should be sufficient. Look at that lovely trend line. So if you have got caught out on an earlier one for 15 pips, then that's an absolute beaut. That's on the 1 minute. So you get in, you've got that long candle there. So you might have missed that because that's a 1 minute candle. So you might have thought, oh, what's going on here? So you could have got in there, or even waited until there. And then you would have had, and believe me, I make it sound so easy, and I don't always catch these. So don't think I'm getting them all the time either. 15 pip stop loss doesn't quite cover our quarter theory, but it's far enough down that we can forgive that, I think. And then you've got, because it's a fast pair, strong downward momentum, you've got pitchfork and quarter theory together, which is one of our perfect profit take profit areas. So you could have got your 30, 33 pips back there, made up for any 15 pip loss. So that would have been a very good trade in New York. And then carrying on through, I'll move on to something else now, but just see what it's doing at the moment. Nothing very much. It's sitting between pitchforks and quarter theories. I haven't done anything today. And there it is. I quite like those areas when you see price pinging off there. Break into retest of, that's a nice one, isn't it? We've missed it, but look, we've got break and retest of quarter theory and pitchfork above the 62. Nice little entry there. There. On that buy candle. And then it's already up. It went up 22 pips, and that was in. So if I'd been on the charts, I would have definitely looked at that. I can see there's a green pitchfork running through there, and that only took from that candle to that blue one was 1, 2, 3, it's about 5 minutes. 5 minutes for your 20 pips. So that's 15 to 20. I'm not very good on ratios like that. 1 to 1 and 1.25, isn't it, or something? So that's everything on those. I will now look at some of these others. Oh, where did I save them? I may have to. Just want to bring up these ones. Hang on. Slow machine. Close some of these windows. That should be enough. Right, this is one of them. So this was Australian dollar, New Zealand dollar. Very similar pair, actually. Not a fast mover, and it's not one that I trade very much at all. Because I find it, oh no, sorry, I do beg your pardon. I've got it down as a 7, but I've also got a note that Chance says it's a very wicky pair. And because it's a very similar pair, I don't know why that puts me off, but I just don't tend to trade it very much. But I guess we all have sort of little preferences. So trade target hit 20 pips. I think it'll carry on as the 62 and the 930 are crossing. So here we have a very nice strong entry. Simply by that I mean quarter theory and pitchfork bang on together. We love that. We've got a double floor to protect us. And you see price here 1, 2, 3, 4, 5 times it says please buy me, 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 please buy me. Oh, I'll dip down a bit on the hour just to fool you. And then here's our spring. So you get in So you've got the break and the retest of both 4 times. Can't get anything stronger than that. Lovely little doji red candle there, and then bang, you're in on that first green up candle. So up it goes. It retouches the 62. You're fine in the trade. It's staying above the 62. Price is now the orange current momentum's crossed the 15-minute. Really good sign. Very strong sign for the buy that price is continuing in a strong upward momentum in this case. And then they got on out at their 20 pips, but actually you would have been extremely safe. Look at that strong momentum and the gap. It doesn't even retouch it like it did down here before it springboarded off. And I think that ended up at about 35 pips. So if you added up that 15 pips, that's 3% over the course of 100 trades over the year that you've foregone. You would have increased your account 300%. So anytime here, once on that ratio, once you saw it stalling out, don't be greedy and think, oh, well, maybe it'll carry on taking off and it'll go up to quarter theory. I mean, you know, take your money and bag your money, because otherwise every pip you're dropping back. And then why bother after that ratio that you've secured? And then once, of course, it's dropped below the 62 and a break and retest of that 1-minute trend line, you should be out that trade. But you know, you could have put the trailing stop on, but it was non-farm payroll day, so you could have put a trailing stop 3 pips behind your 62 EMA and just see how it played out for you. So very nice trade on that one. And then I thought I had another one here. I'm not sure. Just open up. I think it's opening up. Slow. Very slow. Try again. I hate it when you have to keep clicking. Do you think you're going to get the machine get itself? Sorry, should have saved them before. I thought I had saved them. Now it's completely stuck. Sometimes when that happens, I have to close Facebook and start again. Right, here we are. Oh, that was the AN one. Maybe that's all I've got. I thought I had 2 different ones. Maybe I didn't. That's quicker anyway. Oh, Eurnzd. Eurnzd, they took this morning, UK time, 8:10, so a few hours ahead of non-farm payroll, being cheeky. And again, a lovely recognition of finding a pitchfork and quarter theory together. Not all our trades are like this, but they are fun when they come together like that. So you can see that you had, I can't see the sessions timer, but obviously, oh, that's 4, here we are down here. So this is Tokyo coming up to here. So quite a bit of movement, and it is a fast pair. And then 7:30, 8 o'clock, so pre-London and then coming into London. So actually, again, this is another one where you could have been fooled. I think these are trend lines. This is a downward trend. So it would have been quite easy maybe to have got caught out. I presume these are, these must be the extensions. So I like extensions. They've got them in dotted lines. So in this case, rather than thinking, oh, break and retest down for a sell, because these are extensions which should act like Bollinger Bands and elastic bands and ping price back into the scan for us, as we know, like here, sometimes it doesn't always work like that, but that's what we're generally looking for when price has completed in a C to D leg or the other way in a scan. So although we've had a break and a retest here once, twice, 3 times, we're not looking for a sell because of these extensions until it comes into a new scan down here. So we wait until it comes back into the extension. Sometimes I'll try and put a fib on from here. Sorry, can't put a fib on this one, but a fib on from low to high to see if it's come back to finally find 78.61 or 88.6 to ping it up, the start of the long extension leg. So here we waited until it actually did a break and a retest to the buy side, which is what we're looking for off the extensions. And again, you can see the trend starts on its way up. I presume that's 10 pip break and retest back to the pitchfork above the 62. It's broken the downward trend line, It doesn't come back to touch quarter theory. I don't think that matters. Well, obviously it didn't, because this was a successful trade. It wicks off, the red candle wicks off the pitchfork, and it's already started this upward momentum. It retests here as a wick. Oh, that's an hourly candle trying to push down, red sell candle, doesn't like it, it's trying to fake out. Then 2 little dojis, and then it's off. And it's off for its 20 pips, or however many pips that is. I presume that's 20, because that's what we normally mark it up as, to that pitchfork there. So a very nice trade there. And then I'm not sure if I've got any others or whether it's just showing how. So this is EN, what happened next. So as you can see, and I do thank them for sharing this with us, because they got out at this 20 pips, and quite right too, because you had a wick off the pitchfork saying it's failing to break above, and then 1, 2, 3, 4, 5, 6, 7 minutes of rejections and stall out. You've already made your trade goal, possibly your daily goal, if that was 5 pips and you got out right at the top, but unlikely. And then bang, it starts to, as fast as it's come up, because that only took, how long did that take if we got in, say there, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 17, 20, 21, 22, 23 minutes, a pip a minute, and it takes 10 million to move a pip. So we'll have that, thank you very much. And then as soon as you see that, fast money, secure the bag, because in 1, 2, 3, 4, 5 minute candles, you're right back down to what, about 5 pips or something, and under the 62, comes up to retest the 15 minute, but it's already on its way down. That's just a little retrace. So that is critical. Fast money up, 20, 25 pips, don't hang around, stall off pitchfork for 7 minutes, grab the money. And I can't tell you how many times I haven't grabbed the money, and then I've been stopped out at 1 pip. So, and I still do it. So that's everything on that. We've got 15 minutes left. I'll just show you GU. I didn't get into this yesterday. I don't know why, because sometimes I get, just feeble excuses. I know I get tired and busy. I look at something and then I don't do it, which, you know, I do many times and then kick myself. So this was the sharp pattern scan, GBP USD. That was from yesterday, and broke and retested the D point. I marked it there. I then marked it here. And then it, as you can see, did its very nice drop. And I actually was going to go and try and go for 100 pips on this. I don't know what happened that I didn't. Maybe I was just tired or something. And I said, all right, I'm going to swing this one for 100. And sure enough, I would have got my 100. Because that was exactly, I was exactly correct on that one. So yes, I'm kicking myself yet again. And the reason was because I must have looked at something further back here. And I also looked at the take profit on the I know the scanner's working again now. I looked at the take profit levels that they set on the scanner, which, if you notice, often they set them at a few pips above quarter theory, and they do that to be safe because of the bankers do no stop losses at that level. So there was the 100 pips, and I did it because I saw that happening here and here, and I just thought it looked like a nice safe level. But as we know, 89% of the scans complete fully down to that C point. So that would have been, you could have got a very nice trade of about 50, 100, 150. But the good thing about our style of trading is we do it in increments, stack-ins and increments to protect our stop loss. And because if you're preferring this style of trading, then like me, you don't want to work with 50 pip stop losses. I mean, mentally and financially, that's just not, I just can't do that style of trading, and I'll never do that style of trading, because if you have to go in on a bigger time frame. If you're in on the hourly with a 50 pip stop loss and you get 50 pips, you've had to work 5 times as hard as we do for 50 pips on the 1 minute with a 10 pip stop loss. And that's why, that's our profit regulator, and that's why professional traders work that way. That's how, I'm not saying being arrogant that we're professional traders, we're not, we're retail traders, we're little minnows nipping in here and there in these gaps in the strategy of the bankers. But the point is that it's important to work the same principles that decent big boys work to, and they work to compound their money sensibly in line with their profit regulator. So your stop loss determines is your profit regulator, and your entry determines your loss. And we all know that, don't we? Being in late on an entry, or the price reverses on you, or whatever. So that's GBP USD. I really must pay more attention myself next week and do more of what I look at. And I might get further forward quicker. My big plans, like we've all got. Okay, and here's what's happening with Euro USD, and it's now down at 176. I think there's something in the chat. I'll have a look at the chat in a minute. I've been patiently waiting for this to come down to this key level, because this is the end of a scan, and that new scan of breaking. Wait a minute, 17. I was waiting for it to come into this new scan. 1.17 was the key area down here. Maybe that's why I got the alert there. 175. But it's between 2 scans, so I'll see if the scanner brings up any new scans on this. But I was looking for sells on this, but it's going to get a bit. You see, it didn't really do. Could you have got into that one? Let's just analyze this. So Euro USD. You had a pitchfork touch. You didn't get, you see, it's difficult because you didn't get a break and a retest if we follow our rules here. So you've got quarter theory above. Could you have got in on this trade? Short position on the pitchfork, 10 pips dot plus. Can't quite cover it, but no matter, you could increase it a bit. And then 20 pips there. So it did give you nearly 50 pips and carried on down, but I don't see the entry. I wouldn't have been able to get that. Maybe chance would, but I can see all the stall out along the 15 minutes, which you know, and the quarter theories above. No break and retest, comes under the 62. Have I got 3 confirmations? Got a downward trend. Can't put a fib on that. I would have found that a difficult trade. I wouldn't have seen that.
Sarah, can you have a quick look at EN? I think that's setting up nice.
Yeah, that looks good. So on EN, we've got an upward trend with the orange about to cross the blue, it looks like. That's on the 5 minute. Let me just put the 5 minute trend on and we can always adjust it. I'm not a great fan of trades on a Friday afternoon, as you know, so that's on the 5 minute. Let's come to the 1 minute and magnify it. and see what we've got. It's a bit big for me. So on the 1 minute, here to here, depends how you want to do. Well, I don't like this trade because it's stuck between quarter theory and the pitchfork. So that's my initial reaction.
Right, so I've got a different pitchfork again to you. This is
Okay. Okay, well, let me just come out and see which pitchfork this is, because I'm not always, I had to ask someone for the latest EA pitchfork. I drew it and it disappeared. It didn't save it. And then I couldn't go back. The scanner wasn't working. So I've got a D point of the 3rd of August at be midday UK time.
Mine's the 7th of August, 0500.
Well, there you are. I'm behind. 7th of August at
0500.
Oh, well, that's good. That's going to be right at the bottom where price is at the moment then. So what is your C point? Is that the 6th of August at 0800?
It's the I've got 6th of August 0700.
Yeah, and then the 5th of August at 0900.
Right, D point's the 7th at 04. The C point is the 6th at 08. The B is the 4th at 2300. And then the A point is the 4th at 09. And the X is the 3rd at 12 o'clock. 12 noon.
Do this quickly.
And I was just wondering, when you have that happen, do you remove the very recent old one and replace it with the new one?
No, I never remove them.
Okay.
I fade out
Yep. Okay.
fade out the
Thank you.
lines, that's all, just so you can see them very gently in the background, because often price will stall at those lines.
Yeah.
We keep all our old scans because they're still tradable, but we do check them to see that price has respected it and that they haven't glitched. Sometimes they can slip for some reason. Right, okay. So we're done. I don't know why I've missed that one. Maybe it's because the scanner wasn't working. Did that come up today then? What must have, yeah, maybe that's why. Okay, so we're now on the correct most recent scan. We've got a very good entry there. I agree. And I'm sorry if you've missed it because I've been dicking around drawing scans.
No, I was in it.
Oh, well done.
I was in it anyway. I just.
Oh, that's fabulous. Look at that. Well done, my man. Awesome trade.
It was just break and retest of the pitchfork.
Oh, that is superb. But above the 62, it said, buy me, stall, spring off. Fantastic trade. Lovely. Well done. Good job on that. Sorry we missed it because I was behind on my scans. We could have had that. That is lovely. Perfection. And that's a good point about if you've been trading off the old scan, I wouldn't have seen that trade because the old scan is here.
Right, move off that now quick before it comes down.
No, it'll be fine. It's still above. The 62 is crossing the quarter theory and the pitchfork. You're going to get some, you've got to give it room to breathe. That's the old pitchfork, so hopefully that would hold it as well. You're above the 1 minute trend. Let's put our long position on. So somewhere, I'll put it there. So wait for 15 pips, and then you're looking for that next level, that 30 pip target. Fast pair, but put the 20 in. And technically the 15 pips, but because they're so close together, you could actually increase your risk to reward ratio on that one. Put our line on. Well, this is how I like to do it. So say we were in at 1.78050. So that would be 150, 120, wouldn't it? Oh, I'm no good at that kind of maths. 15 pips, that's 13. I bet you're going to say you've chickened out and come out the trade, aren't you?
No.
Hmm? 14. I'd still be in that trade. Ignore that. That might be putting you off. Nothing wrong with that trade. Not on a fast pair like this. Above the 62, it hasn't broken the 1 minute trend. It's in a strong upward channel. I know I'm doing that the wrong way around from what you taught me, but I've forgotten how to do it. I have to go back and look at your notes.
Parallel on the trend line thing, instead of just putting trend line, go down, it's parallel channel.
Where? Here?
Oh no, on the trend line, on the left of, right on the left. Yeah, there. Go on to trend line.
Oh yeah. Oh, thanks for that.
Put parallel channel, and then draw your first trend line, and then you just move the mouse up.
Oh, thanks very much. I'll just watch this for a minute, because that's now lesson in confidence. That's retrace 10 pips. But another thing we can do, if you want to say, oh, how should I have got out at those, that you can see there's your upward higher lows and higher highs. It's in the channel. It's above the 62, which is now crossing very nicely. It's already an upward trend anyway. It's already crossed the 15 minute, and it's now crossing our pitchfork. And if we look at the hull, and it's wicking off on the sell candles, that's past the hour as well. So that could have been hourly fake out to the downside. Sometimes I've seen people say, which is quite right, they've got about 20 pips, but they got out the trade because it's coming up to 10 minutes to the hour. And I thought to myself, actually, that's a good tip. Oh, excuse me. So I think that might influence me in the future. Anyway, all green on the hull. We'll just watch this one for a minute. And that was say the entry was there. So stall out, doji, doji, spring on a buy candle. So it could come right back down to test that 62 because price always moves between levels and we always know it likes to come back to the 62. Oh, that's a good sign. Did you see the orange 62 jump above the pitchfork there? And it will want to find its points of reference. So price will want to come to the 1 minute. It'll want to test the 62. It'll want to come down and test that 15 minute. So it could be in an upward momentum, but you'll see that reversal, that dip down because it's testing the 15 minute. The power of it is phenomenal. So there we are. The 1 minute trend line is holding price. It's wicked off it. So 1, 2, 3, 4, 5 minutes of reversal, 10 pip reversal. Had to sort of suffer that, but that has come above there. And of course, as soon as it hits that 15 pips, I like to put a little line on just so I can see my levels. Then I say to myself, how much do I, usually I want to be 3 pips behind the 62 for safety. In this case, that would, on a fast pair like this, that would be behind the quarter theory and the pitchfork, but then I'd still technically be drawdown and lose money. This is this judgment we have to make if price suddenly reverses on me. So ideally when the alarm goes off on the 15 pips, and I always follow the same routine and my brain isn't panicking about things. I always follow exactly the same routine in the same colours, everything, like a footballer. Not that I play football, but you know what I mean. So you have to make this decision when the alarm goes off. Are you going to put yourself 1 pip in profit for a risk-free trade, but price could take you out because it wants to come back? It's a fast pair and test that 60.
I'm at 98 on the stop loss now.
Oh, okay. So you've moved it further up. Yeah. Yeah, that's good. Because if you will want to be behind the 62 or behind the previous low on a buy. So really, that means you should be down where Warren said he is, round about there. And that's what I do. I try and pinch it up. But as soon as I can get to that 1 pip, the better, just in case price crashes on you, because all those losses add up, as we know. You know, we don't want to get caught like that. So it is a lesson in patience and in confidence and in judgment to hang into these faster trades and not give up and not just cash out. Because if you keep cashing out, even on a 10 pip stop loss, if you keep cashing out at 10 pips, how are you compounding your account? You're not doubling. You're not going to get to that level we want to get to. We've got to keep doing the 2-to-1 ratio, especially on these fast pairs. And the chart always says you don't get into a pair like this to come away with 10 or 12 pips. Now, it is Friday afternoon. It is post non-farm payroll. And, you know, it's not a brilliant time to trade, is it? So we do have to bear that in mind. I just failed to touch the top of the channel. It's strong thrust up, little retracement down. So not my favorite time of day to trade. And how many pips away from the 62 is our 1 pip? So about 2.8 pips to 3 pips to try and get it to. So really, technically, we'd be about 6 pips behind. So we're about 3 pips away from trying to get that 62 up there. We want it up more so we can push up a bit more. But it hasn't done it yet. 99.8, you said, somewhere like that. Yeah, so you could probably be pinching it up a bit more, but we're still in a loss. Now it's breaking that trend line. So again, you see, it's such a difficult judgment because it could now come right back down here, and it is Friday afternoon. You know, it is an inexact science, isn't it? So, and then it will have broken the channel, and is that as far as it was going to go on the Friday afternoon?
I'm just like saying, well, you know, if this was a normal trader, you know, whatever day, you know, I can't see a more perfect setup. So,
well, I totally agree with you, and this is why we have to be quite aggressive sometimes. And then if we do get stopped out, you know, to try and put the alerts on and look for that trade later on, but without that panic type of revenge trading. Oh, I must make my money up, because we always know it never works out like that. Sometimes what I do as well, which is, I know you're probably going to look at me, but I sort of stretch my charts because I think that might help it look like price is going more the way I want it to go. And every time I do it, I think to myself, why are you doing that?
oh dear.
Well, it's a difficult one because you had a perfect setup. It's just the time of day, maybe, the price won't move as much as we thought. So, you know, how do you, if you got in there, that was 12.7 pips, about 12 pips.
You know what? I'll make it go up if I cash out now.
You've got to stop talking like that, because you manifest these things. Thoughts of things, they have wings. I'm a very firm believer in that. So we've got a little doji buy candle there. A little blue doji candle saying indecision. So if you do get stopped out, it is time of day, Friday afternoon. I don't trade this time of day, and I don't trade on a Friday anyway, or try not to. Some mornings I do, but it'll be that. It'll be time of day that it didn't have enough momentum in the market. Let's see what the hull's saying on the 15-minute. Well, it's still all green, hasn't flashed red yet. So with the hull, as you know, for exits, we have two long opposite direction flips mean we are out the trade, and we've only got one so far. So that is telling us to get out the trade either. Oh, just going to stop sharing because I wanted to look at the chat, and we're over the hour as well. 23 pips to pitchfork. The hourly wiki move was a bit of euro news. Did I send you my euro? Yes. I'll have a look at that. It's come back down and stalled out right above that old pitchfork. Let's have a look at this. Let me just share screen. So this is Euro USD, sell only to midline. So that's because that's the median on the scan, meaning it's a sell scan with a D point up here. We're only looking for sells down to here. 20 pip trade target. That will be the green box. Quarter theory, the orange dotted line. Pitchfork, the white one. 62 EMA, that's this line here, the orange rolling line of support and resistance. So on a sell, you want to be below that, getting in on a red candle for the sell. Trend break and retest 930 above, which is the 15-minute one there. So if we analyze this, then not a very clear, a couple of pips off to the break and the retest on the pitchfork, but a very nice conjunction of the pitchfork and the quarter theory. Comes up to test it on the hour. There's the 8 o'clock London hour. A trend break. Here's the trend down. Okay. Upward trend. Trend break is here. Trend break there, and a retest of the 930 I don't quite see the retest of the 930 down here. Trend break and retest. Oh, I see 930 above. I was reading it incorrectly. So wait for price to come below the 62, and then they've got in there and they've come down for the 20 pips. So I'm not sure that's a trade I would have exactly seen because, or taken, not because I know any better, I absolutely don't, but because I didn't have a clear break and retest of the pitchfork. But it did work because it had the break and the retest back to the 62. It didn't come, and he's drawn the new channel here. So I do like that idea. Downward trend line drawn there, and then picking it up there because it shows that break into the new channel. So I do like that visuality, and I'm going to try and do more of that myself. So very nice setup on Euro USD there for the 20 pips. And how are we doing? Oh, well, that's good. That's good. It's still above the 62. It's flattening out. It's stalling, but it's not dropped right down. See what the hull says. So it's tried to push down. Still green. Hasn't flipped red yet on the 15-minute.
Where do you mean the flip red? What, can you just explain that?
This little thin red line is price going through the 1-minute chart. This is the 1-minute trend price line, green and red. So here it has, and the band in the back is price on the 15-minute chart. So if we had got into the trade back here, for example, and we'd had one longish flip red, we would not have got out of the trade there. But the second long flip red, we would have got out of the trade. That's what we mean by two flips, because we're in on a buy. So we're looking at the green line on the 1-minute. So if we were in on a sell, for example, here, we were in on this sell on the 1-minute on the red line, and then we had one flip up to the green, we wouldn't get out of the trade. There it is still in the red, but as soon as it turned there, we'd be out the trade. Does that make sense? Because that's what we mean by it. Does that make sense? And it's a lagging indicator as well. So the band at the back will not change until about 30% after. It's about 30% lag. Don't know if there's one back here. So price started moving green there, and there's your sort of 30%. It doesn't turn to green until way up here. It's a lagging indicator. Yeah.
I think that's the end of that trade now.
Yeah. So if we had, could we have got in? We couldn't have got in any earlier unless we got in there. But it wouldn't have saved us that much. Wouldn't have given us that much, would it? That much more. Still would have only given 12 pips. Well, I think then it's nothing wrong with the trade. I think it's just time of day that we're trading. Friday afternoon. So that's about everything, unless anyone's got any more questions or anything to share in the chat. Oh, that was another one I looked at yesterday and didn't do anything with. Euro GBP. So I'm going to close down the charts now. And I'll try and get onto my chart markups Sunday night and put them in the group. GBP USD, Euro USD. I think I'll take that lot off. And Euro Ward. Oh, okay, so that retraced 15 pips. And let's see what the hull says. So it came right down, so a strong candle, sell candle with a wick, almost down to the pitchfork. Not quite an engulfing candle. Hasn't turned red though. So as I say, technically, room to breathe, 3 pips behind the 62 would mean we would have been about up here. So it still would have just about been in the trade, depending on your broker's spread and commission, because that is the problem. That's 1.6, 2.43. So and it just depends on the spread and commission, doesn't it? But it does look like it's coming up again now. So, but you did have to suffer a 15 pip swing back, and then very tight on your being taken out by the broker. In which case that would have been 4 pips, draw a 4 pip loss.
Still hanging in.
I'm proud of you. I thought you were going to say it closed out.
Oh no.
Why did you say that's the end of that trade then?
It just looked like, well since it broke the channel, it just looked like, and it broke the 62.
I know, but this is what they do to you, isn't it? These people, bastards. See, have you worried at that sort of thing? And then you've got to judge where your stop profit is compared to the broker's spread and commission, so you don't get taken out on the broader spread pairs. I do have a rule of it being 3 pips behind, and I try obviously never to put it to the 1 pip until it's hit the bell on the 15 pip, because you've got to give it the room to breathe.
Yeah, I think it's messing about now, isn't it?
Well, it's sort of torture actually. So I'm going to stop share, and
Okay.
I'm
Thanks,
probably going to get another beer. So, well, thank you very much for joining. I hope everyone, and I really do appreciate you sending charts in, everybody. I learn a lot from it as well, and that's what we're here to do, isn't it? Just to try and tighten everything up in our favour.
I'll send you some of mine next week.
Oh, that'd be great, because the bankers, they don't miss the odd million that we want. It's small change to them. Okay, everyone, have a great weekend. See you next week.
Thank you, Sarah.
Bye.
Bye.